Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. It's all about tariffs, isn't it? On Tuesday, President Trump said he will not offer additional extensions on country-specific levies, those set to take effect in early August. Interestingly, though, Monday evening, Trump said he was not 100% firm on that deadline. Also today, Trump said he's planning to implement a 50% tariff on imported copper. In a moment, we'll get the view of former U.S. trade negotiator Stephen Olson. First, let's bring in Frances Stacy. She's economic strategist at Scarlet Oak Financial. Frances, thank you so much for making time to chat with me. When it comes to trade negotiations, we've already seen two deadlines move. Perhaps there's the possibility of a new deadline moving as well. I think it's a pretty good illustration of how difficult it is to get trade deals done. In many cases, it takes months, if not years, to negotiate. Where are we right now in this process? Are we nearing an end? I guess that's the question.
I think that this deadline moving or deadline shifting has been very strategic on the part of the Trump administration, because basically what it does is they saw what happened with the volatility in the equity market, but particularly the volatility in the bond market around the Liberation Day announcement. And so what they would like to do is not create a news event. And so they're trying, in my mind, to manage market volatility by keeping this sort of an ever shifting sand. And that way the market is not really able to price it in immediately, whatever the eventual outcome is. And I believe it's just literally to reduce market and bond market volatility, in addition to the fact, as you say, it doesn't happen overnight.
One of the things that was a little surprising today, perhaps for the market, was the president saying that he plans to implement a 50% tariff on imported copper. What does that mean? Are we going to be looking at a higher tariff rate for copper no matter what? The rate may be up for debate, but we're looking at higher taxes on imported copper?
Yes. I mean, goodness, if he sticks with that. I mean, the thing about copper that's most notable is it's gone up 6.4% in the last month, and it's on the rise alongside other commodities. And so, if that sticks, you're definitely going to see those prices continue to go up. And then that sort of circles us back around to this conversation about the Fed and inflation. Is it a one-time price adjustment? Is it a multi-time price adjustment? And then you look at things like copper and other commodities where they have several places in supply chains. And then you kind of have to go, there's a concatenation of events that occurs, which could end up being, have multiple price hikes, even though it's supposedly a one-time adjustment. And all of this is speculation. So it just remains to be seen. But copper prices are moving higher in addition to silver prices and oil prices. And so the biggest thing that we look like we're having right now is potentially a reacceleration of inflation, coming into this third quarter.
The term stagflation comes to mind. Is that really what you're describing? The threat of weaker growth and persistently higher prices?
It looks that way. And even if you look at the jobs numbers, that was positive, which then, gives the Fed an excuse to delay their movement, delay cutting rates, continue their pause. Trump's got sort of a war going on with Powell publicly. But if you look under the hood, you see, seasonal adjustments, you see government employees, you see various little things. So the Fed is probably going to wait until the labor market cracks meaningfully. But yeah, I mean, it's hard. Trump wants him to lower rates. We understand why. Yellen issued all those bills. They're coming up for maturity. He's got to liquefy the economy, since fiscal stimulus is basically has been the source of liquidity since the Fed started reducing the Fed balance sheet due to quantitative tightening. And yeah, with rates higher, I think Trump came out publicly and said that's going to cost everybody $900 billion. And we have a fiscal situation. So he is in a very bad position. He's serving multiple masters. And I would say Powell is in just as bad of a position.
So you mentioned the fiscal position. That takes us to the big, beautiful bill, which is now law. Yeah. And the CBO estimating that over the next decade, that will add around $3.4 trillion to the deficit. Lo and behold, we hear from the Treasury Secretary today saying, wait a minute, we could see over $300 billion of new money coming into the coffers for the U.S. Treasury. Do we need to consider the financial impact of tariffs when we're talking about the deficit now?
Certainly. What's interesting is so I'm sure you're familiar with Ray Dalio coming out and giving these sort of warnings that we have to get our debt to GDP, our deficit to GDP ratio down to about 3.5%. Otherwise, we're going to fall off of a debt cliff. If you reverse engineer the math from Liberation Day, the nebulous math that was presented, you actually effectively do that with last year's trade numbers. So now we've moved off of the rates from Liberation Day, but yes, they are hoping to, quote unquote, grow ourselves out of that deficit and out of that dire warning from Ray Dalio. So that's, and trade revenue is obviously going to assist with that. Trade revenue is sort of a justification for the big, beautiful bill that's now law. And as you say, projects deficits going forward. And I think this was some of the consternation potentially behind the scenes with Elon Musk. Elon Musk was sort of an absolutist. You have to, make massive fiscal cuts. But the whole catch-22 here is Fiscal was providing the liquidity in the system after the Fed raised rates and started reducing their balance sheet. And so you can't just reduce Fiscal too drastically because you remove the liquidity for the system. And then incidentally, that increases credit risk.
Let's talk about the difficult position that corporate America is in. Goldman Sachs saying today that companies will have to adjust their cost savings and pricing strategy to offset the impact of tariffs. So when you look at margins now, are you concerned about margin compression in a meaningful way? So again, the Trump administration with the sort of shifting sands around these deadlines and what the ultimate numbers are going to be. I mean, any Wall Street practitioner wants hard numbers to put into that, discounted cash flow calculator on any asset. Right. Same goes for margins, same goes for any fundamental analysis. And I think companies are going to do the best that they can to preemptively plan for the worst case scenario, but it depends on their sector. It depends on their consumer and how much their consumer can bear, because consumers are stretched. And we can see that with credit card debt. We can see that with the interest rates on credit card debt. And, we've had an inflection point in defaults. It hasn't hit a systemic level yet. But yeah, I think corporations have they're probably going to plan for the worst. Where does that leave you with the equity market? Are you constructive?
I'm constructive. What I found most fascinating was when the market sold off earlier this year, it departed measurably from the M2 money stock, which is the liquidity. So the S&P 500 is very correlated with that. And I thought, okay, so either the liquidity is going to come down and marry the S&P, or the S&P is going to go back up and marry the liquidity. The S&P went back up. Now the liquidity is dropping out of the system again. So we'll have to wait and see what that is. What I find most fascinating right now is historical correlations versus what's occurring now. And for instance, the US dollar has a massively negative correlation to the SPX, to Bitcoin. We learned that Bitcoin was not gold during this sell-off. And then to the CRB index. So I think that is a fascinating thing to watch. I think the correlation between the S&P and liquidity in the system, the M2, is important to watch, because either you're dealing with historical cycles and they will play out as they have historically, or the mechanics behind the scenes with de-dollarization and other things going on around these trade deals are going to start to break down. And I think the early indicators of where these mechanics break down is you're going to see it in correlations doing very strange things. And so that's what I'm going to continue to watch. As far as the equity markets, until they have a catalyst, there's a lot of upward momentum. And so I don't see that being interrupted. It
seems like you're a little dubious that we're going to get 2 rate cuts this year.
Well, hard to say. I think if inflation reaccelerates, which I think is possible based on the fact that these commodities prices are moving higher at the moment, then potentially not. And then Trump is baiting Powell like crazy. So, doesn't that incentivize Powell to kind of hold his ground in some kind of a power struggle there? I think that's an interesting strategy.
Where are you in terms of looking at opportunities offshore right now? Let's stay first in the equity space. Are there places that you would rather be other than the U.S. right now if you had to put on an equity trade?
I think growth and inflation is going to broadly continue to expand in Europe and other countries, where I think that we're going to start to have a deceleration of growth in the U.S. So again, those markets are already up. Those trades are already in, but I think that's what I'm going to be watching. Some other countries are doing better, coming out of their sovereign debt crises, Argentina being one of them, watching those things, watching the bond yields. So I can't say definitively, but at some point in time, there's going to be extra volatility in the U.S. markets. And I think that the global markets, who have all the same fiscal issues, all the same debt issues, are going to maybe be a little more stable and a little bit more attractive to investors. But again, be tactical, because the variables can change with a truth social or a tweet or something that comes out quickly.
Fair point. That said, would you be surprised if we had 10% pullback in the equity market here in the U.S.?
No. And if you look at the M2 money stock, again, that's pulled off. And so for that reason alone, I wouldn't be surprised. And if he's really, he's now saying that he will not move the deadlines anymore, and August 1st is absolutely it. If the trade deals don't come in favorably, the market's opinion about that, then yeah, I could see a lot of heightened volatility come back into equities and also into bonds.
Francis, before I let you go, can we talk a little bit about the fixed income space and the advice that you're giving clients if they want to be exposed to the bond market right now? And I'm wondering whether or not the safe place is kind of the belly of the curve.
Well, I'm limited a bit here by compliance, but I will just generally say, yes, obviously, that is where people are hanging out, because again, you have a curve that's steepening. Is it going to end up being more of a bull steepener or bear steepener? When you have the re-steepening after a massive inversion, which we had, almost a record inversion for almost a record amount of time. I think the Great Depression is right there with it. And you come into the re-steepening, that's usually when you see your credit issues, right? And so hanging out sort of in the belly of the curve is what some practitioners are saying. I think at the moment, we are just staying the course. What's working is working. And we will be kind of staying the course and looking at the momentum until there is a catalyst for something to change. And I think the markets are probably just going to wait and see what shoe drops, and then they're going to price it in very violently. But I really see, until we get some certainty or some specific numbers to punch into the calculator, that markets are going to stay up. Now, looking at gold, is the bull run for gold over? Are we buying the dips on gold? Well, again, historic correlations. Gold has a negative correlation with real rates. Is that going to hold? Is that not going to hold? The fundamental case for gold is really strong. Bloomberg reported today that Tether has $8 billion of gold stuck in some vault in Switzerland, because now that the prominence of the US dollar is a little bit in flux as these trade negotiations go on and the dollar's falling, there really is a flight to gold, which is really interesting. So just watching these correlations for early indicators, but for the moment, staying the course.
Francis, we'll leave it there. Thank you so very much. Francis Stacey, economic strategist at Scarlet Oak Financial, joining us here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. So President Trump has vowed to push forward with his aggressive tariff regime. And for some analysis, we spoke with former U.S. trade negotiator Stephen Olson. Stephen spoke to Bloomberg's Sherry On and Heidi Stroud-Watts. Sherry asked the first question as to whether or not we've got more clarity about where we're going.
Well, to be honest, I don't think anything has really fundamentally changed over the course of the past day or so. We've still got a boatload of tariffs, in some cases substantial tariffs scheduled or threatened to go into effect at some point in the future. And we've still got a long line of countries lined up trying to strike trade agreements to alleviate those tariffs. Now, what I think has come into sharper focus is that the United States perhaps was a little bit overconfident entering these negotiations. You recall that we initially heard a lot of talk about, quote unquote, 90 deals in 90 days. Well, we're at the end of 90 days and we've got a grand total of 2 deals done, 88 still pending.
Not just overconfidence, but the fact that perhaps the goal of these trade negotiations might be shifting for even Washington. Because if you take a look at all of the trade negotiations, we thought that one with India was actually going pretty well. And now you have threats of tariffs on BRICS nations. How does this bode for negotiating partners?
Well, exactly. These extraneous factors can pop in at any time. All of the mood music around the prospects for an India agreement were very positive, and then we got a late Sunday night, I believe it was, social media post from the president railing against BRICS and threatening an extra 10%, which could derail those talks. For countries, particularly in the ASEAN region, the other extraneous factor is their relationship with China, because it's becoming increasingly clear that the United States is using these negotiations to really put pressure on these countries to try to squeeze China out of their supply chain. So that's an additional complication for these negotiations.
You just touched on the issue of transshipments, right, which has been sort of a real key focus for President Trump. Is there anything that these Southeast Asian ASEAN nations can do, substantively to be able to change that dynamic?
Well, look, certainly they can step up enforcement on illegal transshipments. This is a case where a product enters Vietnam, for instance, from China, and the customs documentation is fraudulently altered to convey Vietnamese country of origin status. Now, that's flat out fraud. It's flat out illegal. And so some enhanced procedures to crack down on those practices certainly could move the dial at least a little bit.
The really haphazard nature of the way that President Trump releases the news and, makes these headlines. We just had a post on social media saying that they'll be releasing a minimum of 7 countries having to do with trade, with an additional number of countries being released in the afternoon. I assume that means sort of an update on a minimum of 7 countries when it comes to trade. We've had conflicting news as to, whether July 9th was a true deadline, whether it could be extended. It's now been extended. Could August now also be flexible as well? Do you think this sort of piecemeal approach is helpful for other nations? Because you raised the point, at what point do these counterparties just think, well, what's the actual point in trying to negotiate when everything is just constantly up in the air?
No, I don't think it's helpful. And I think you used a fairly generous and kind word referring to the approach as being haphazard. It's been even more discombobulated than that. And at a certain point, countries start wondering, look, if the goalposts are constantly being moved, if extraneous issues are constantly being dragged in, and if we never know if a deadline is a real deadline or not, at what point do countries start to question the point of engaging in the process?
And when does the American public also start questioning the negotiations? When you were part of the negotiating team for NAFTA, was that something that you had to perhaps keep an eye on how this would affect actual American people? Because all of these tariffs will eventually translate to higher prices for these consumers.
Business community, yes. General public at large to a lesser extent. Typically, you won't see the American public getting engaged on trade issues unless or until it starts to hit them in the pocketbook, and that will be a little bit further down the line.
There's this idea that Trump's tariff policy has the intention of reshaping global trade, the contours of global trade, right? But even the agreements, if you can call them that we've gotten so far, have really just been broad frameworks or sort of more MOUs, even just sort of handshake agreements. Can we truly say that whatever is achieved is going to change the trajectory of the global trading system?
I don't think so. I mean, for any trade agreement, the devil always lies in the details. And as you pointed out, in all of the agreements we've seen thus far, there are virtually no details. And beyond that, a number of issues, in many cases, the most important and the most difficult issues, require further negotiation. So what any of these agreements ultimately end up looking like could be quite different from what we see today. Or in the worst case scenario, some of these quote unquote deals could actually unravel.
Is that going to be potentially the case with the Geneva framework agreed with China? And will President Trump still have the political capital in order to go back to the negotiating table?
Well, it's certainly going to be tough sledding with China. We saw an additional round of meetings necessitated to take place in London just to sort of reiterate what they thought had already previously been agreed in Geneva. If that's the case moving forward, these are going to be long and arduous negotiations. But keep in mind, the issues between the United States are deep, structural, and fundamental, and are not going to be resolved in a number of weeks or number of months.
The point that Sherry just mentioned in terms of political capital was an interesting one, because I also wonder, in your experience as a trade negotiator, is it sort of commonplace for trade issues to be rolled up also with sort of broader issues in terms of geostrategic alliance, in terms of, broader diplomatic relationships? Because you see these terse relations when it comes to trade with key security allies like South Korea, like Japan in this part of the world. Huge implications for the Indo-Pacific. Do you think that side is going to be damaged when they can't even reach an agreement or compromise on trade?
This is a new sort of innovation, if you will, introduced into trade policy by President Trump. When I was a trade negotiator, the thought that we would be discussing with our Canadian and Mexican colleagues fentanyl or illegal immigration would have been astounding and mind-boggling to us. Trump's approach is everything is on the table, and this is very much of a different approach and is going to complicate things significantly.
Stephen, really great to have you with us. Stephen Olson, visiting senior fellow at the ISIS Yusof Ishak Institute.
Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.